Hi everyone, this is Sean. So this is my first video. I'm recording myself to post on YouTube. Actually, on this video, I'm going to talk about how I took the trade today and what's the strategy behind it and what are the set of rules I follow to take this trade. So I'll dive into the video directly. We are going to look at this chart. It is the S&P 500. If you don't know about it, you will get an idea of what we are discussing. And probably if you are a trader, definitely you know that what it is. So there are different kind of tradings, but what I do is futures tradings, index futures. This is the 15-minute chart. And if you guys, if any of you are new to this, it's completely different thing. So this is the platform called Trading View. So in this chart, today I took a trade and I shared it on my social media, and I'll take a screenshot and share it here. So this is the trade that I took on S&P 500 sell. Hope you can see now. So where I ended the trade and where I closed the trade and what's the points and today and date and time. Actually 6:57 is not our time, not in even New York time. This is actually the platform that I use, so that's a by default timeline. Today I took 77.50 USD as my profit. I'm gonna tell you how I secure this profit, and the platform that I'm using is Funding Pips. So we'll dive into the chart. This is the 15-minute chart, so you can change the chart. So here moving to the 1 hour, for now like it looks messy because even if I'm getting an entry or not, at the time I'll dive into the chart and see whether what's going on, and I'll try to do my own analysis. End of the day, if you want to be a full-time trader, definitely you have to do this kind of analysis by your own. So don't rely on anyone, that's all I can say. So this is 1 hour and this is 4 hour. Likewise, you can navigate. So now I'm moving to the 15-minute charts. So what do you see here? If you are new to this, probably everything feels like a Wagyu. So don't worry about that. I'll explain what I did. So it's like 4 hour. Then after that, I'll navigate to the 15 minutes. Then I'll navigate to the 1 minute to enter the trade. So this is the time frame that I use. These are the windows. And when it's come to take a trade, I wouldn't just randomly enter the trade wherever I want. For example, there are a set of time windows that I have, so I'll look for entry between those time windows. So specifically start of London opening or New York opening. There are two sessions we can look for entry, is New York AM and PM session. Mostly I trade on AM session, otherwise London opening. So I look for entry every day of start of London. So start of London, if it's a start of London, then you have to be very careful. Like it's 3 a.m. New York time. New York time. If not, I'll look for entry from 9:30 a.m. New York time. Works. So these are the two time frame that I use to look for entries. So the trade I took today morning is 3 a.m. I think before 3 a.m. there was a macro. So if you guys don't know anything about macro or kill zones, there are sort of core things you have to learn about trading to get to know about this. So don't worry about that. If you want to know more about this, just drop a comment or just ping me through any social media. Here this is the S&P 500 and Nasdaq. This is the correlated bars that I look for entries. So whenever it creates SMT, I'll look for entry. Here I found out that SMT and it tapped to the mitigate to the parallel gap. With that I start to look for entries. So then I navigate to the 1 minute time frame. 1 minute time frame, you can see there are set of drawings, don't worry about that. So this is the time window that I look for entries, 2:33 to 3 a.m. So that's why I call it as macro time window. So otherwise I'll look for entry from 3 to 4, that's a silver bullet. If not, 10 to 11 is a silver bullet and 9:30 is a New York opening. So from that onwards we can expect the trades because the market will be more volatility than earlier. So here this is the SMT that I marked out earlier in 15 minutes. Now we are in 1 minute. In 1 minute it was completely a consolidation. You can consolidation, what I mean by consolidation here is the price struggle to move higher lower or to take any higher low. So this is what I mean by as consolidation. If I remove it, you can see the charts well. So that's what I mark it as in a red color box. Then after that the price took the low, then moved back to the range again and took the highs as well. So from up and down it took the lows and highs. So if you look at it in Nasdaq in 1 minute, it took the low but it didn't took the high. So that's why I anticipate that okay, the price mitigate the PDRA, that's the fair value gap we have above, and from that onwards it's gonna move lower. That's what my anticipation. So from that onwards, I did my analysis. So here I found that there was an inverse fair value gap. If you don't know any of these terms, don't worry about that. I'll tell you about these later. And the same inverse fair value gap S&P 500 as well. So from that onwards, I look for entry. Then whenever the price moved above this fair value gap and it struggled to move higher, it struggled to take this high, then after that what the price did is it moved back to the range again. So this fair value gap is invalid. So in this case the fair value gap will be an inverse fair value gap. So most of my entries will be inverse fair value gap. That's what I mention it as IFEG. Whenever price crosses below the high fair value gap, I enter the trade. So this is where I enter the trade, and this is my stop loss. And you can see this is 1 is to 1.78 risk reward ratio. So here you can look at it everything. And when I enter the trade here, I just do my analysis in the meantime. So here in 1 minute I found that there was an SMT as well. So before I enter it, NQ also created that SMT, so it didn't took that high. So yeah, for me it's a plus setup, high probability setup. I just enter the trade from here. Very simple trade. Here 1 is to 1.78. That's the risk reward that I had for this trade, because I don't want to risk too much and I want to keep my capital be safe. So in this case my expected take profit is this sell side liquidity, and there's another sell side liquidity below, but I'm good with this. That's all. Thank you.